Good afternoon. This is Tom Alexander. It is Tuesday, January 10th. It is 4:25 p.m. Eastern Time in beautiful Charleston, South Carolina, and this is a special stock market update. I think this is important because the market is once again, it's at an interesting juncture from both a structural as well as technical perspective. If you read my report and you listened to the video that I did, that's posted on YouTube, as is this, over the weekend, then you know that I had a bullish orientation. The reason I had a bullish orientation was because of auction market structure. Specifically, Friday, we had wide range days indicative of an initiative break from a balance area. That's all auction market lingo for those of you familiar with auction market / market profile. And that has a very specific personality. And what it means is that the market should, under an initiative scenario, continue to trade higher almost immediately. Let's take a look at the charts now. By the way, if you are not receiving my written reports and you would like to receive them, please send me an email to tom@alexandertrading.com. If you are finding value in these videos, please subscribe to the channel, like it, and by all means, make comments, ask questions. I will respond to every comment, every question that is made. Thank you for that. Okay, let's take a look at the charts. Okay, what we're looking at here are the 4 U.S. primary trading indices, the cash market contracts, the SPX, the NDX, Dow, and Russell. If you notice, the Russell did something today, the others did not. And what it did was close above yesterday's session high. Now, yesterday sort of was a curveball under the preferred scenario of an immediately bullish market that should trend significantly higher before any significant retracement. Well, you can make a case that that's still in play now, but as of yesterday's close, it was certainly questionable, especially when you throw in Globex trade and today's gap down, which is the exact opposite of what you should see. But this has been one funky market now for over a year, so it continues to throw us curveballs. Now, I mentioned in the report over the weekend that what you should not see and what would be definitively bearish would be a deep retracement into Friday's ranges. That's still true. Now, at this point, we have two more pieces in the puzzle, meaning we have Monday's trade and we have Tuesday's trade, today's trade, to add to, again, to the puzzle. And so what I take away from the previous 2 days is now we have, today is a day where all 4 of the indices, we had the gap down, but they're going to close on, they closed on their high. So now what you shouldn't see a close by all 4 of the indices below today's low under a bullish assumption. If you do, it certainly brings other possibilities into play, certainly not excluding a very bearish possibility. Now, if we were to close below the 50% retracement levels of Friday's range, that's definitively bearish without equivocation. There would be some equivocation if we take out today's session low, especially if it is in front of Thursday's CPI, which brings me to my next point. Thursday, we have CPI. It comes out at 8:30 a.m. Eastern Time. This has been a market that has been tethered to economic data like that is tied to what people think the Fed will do, what the Fed will interpret it, and then the market reacts, has an interpretation of the interpretation, and then they start pushing buttons, buy or sell. And that's what the big money is doing now, and that's what controls the market, the big money. It's not you and me. So right now, I would reinstate my bullish assumption. Yesterday, that close brought it into doubt, and then this morning, the gap down. Frankly, I was trying to go short during the day. That didn't work, clearly. So I am more in the camp of cautiously bullish as we head into that CPI number. but I'm also cognizant of the fact that anything can happen, and I have assumed that just because we're a day or so in front of a market moving number, that the market would not have a wide range day, and that's been wrong many times too. So I'm just going to trade my usual work intraday that I share with members. By the way, if you can look into that. You can go to the website, alexandertrading.com. I have information about memberships there. And we cover this every day. I update this every day. I update it all day long in real time, by the way. This is a special update, end of day update, because things are changing hither and fro. I think we're at a very important time. We're also somewhat in the twilight zone here because we're between the October low and the December high. We're also between the December low and the December high. And those are both very, very important levels. This high volume node, the Friday's range, is so important. It's the most, to me, that's the most important low we've had in months. We continue to have this disparate activity among the indices, but if all four of the indices now close below that low, it's definitively and immediately bearish. We had a similar situation over here back on November 9th, November 10th. And I outlined that at the time and said, okay, if we close below that low, that November 9th low, is definitively bearish. Well, again, we had this disparate activity in the indices where we had the NDX and the Russell close below that low, but we had the SPX and certainly the Dow did not close below that November 9th low. So this has been a market that has been characterized for months now by this disparate activity, and it's key to get in sync, and at some point it will get in sync. Right now it's not. But short term, two key levels to the downside, Tuesday session low and the 50% retracement levels of Friday's cash session range are critical to the downside. And then what follows on Thursday, I will update over the weekend. But let's take a look at something else that I think is important, the technical picture. Now, what you see here, I keep work on NYSE data, and specifically NYSE advancing minus declining issues, i.e. breadth. And I also keep moving averages of just NYSE advancing issues, 10-day moving averages red, 5-day moving averages green. Both of those are approaching upper extremes from where you typically want to be. And again, this is contextual. There's no rote way to trade it. It's not buy, sell, red, green, that type of thing. It's contextual. But it's interesting to me that we have to get above this level by all the December high and all four of the indices to begin to talk about, are we in a bull market? Okay. And it's hard for me to envision that we will get there before you get really extreme in the 5-day and the 10-day moving average of NYSE advancing issues, which puts us in a fascinating situation. Another thing I'll point out, the green arrows you see are days on which we had NYSE closing breadth of negative 2,000. Now, in a bear market, you will have rallies, and then you have these bear legs where, once again, you can see, you can go back. I have all this was the top of the bear bull trend back last January, and then you had this series of negative 2,000 breadth readings, and all the legs to the downside. You would have some respite in that on the up legs, as you would expect. Now we have gone about as long. Actually, we've gone longer than any time since last January, and we've only had one negative 2,000 breadth reading. I have talked about this numerous times over the past couple of weeks about how odd it is that we had this decline and we never had a closing negative 2,000 breadth reading. That's another potentially bullish intermediate signal that the market cannot contract. The internals of the market, the powers that be, are not letting this thing. It's so bid that the powers that be are buying it up before it can get to that negative 2,000 breadth reading. Now, that said, if we get a negative 2,000 breadth reading and it coincides with taking out last Friday's low, that's negative that is an unequivocal sell signal. So guys, we'll see what happens next couple of days. Tomorrow's Wednesday, then again Thursday we have the CPI at 8:30 a.m. You guys have a great evening, and I will update again soon.